Welcome to the Pro Ticker Deep Dive.
It is great to be here.
Usually when we sit down to talk about a disruption in the financial sector, the protagonist is, well, it's pretty predictable.
Right. It's usually a guy in a fleece vest out in Silicon Valley, or maybe a shadowy coder inventing a new blockchain protocol in a basement somewhere in Zurich.
Exactly. We are not usually talking about the guy who spent 50 hours buried alive in a coffin for YouTube views.
No, we certainly are not. And that is exactly why today is going to be so fascinating. We are looking at a collision of worlds that, frankly, sounds like a headline from a satirical news site.
It really does. If you just read the headline, it sounds like a joke. MrBeast, the world's biggest YouTuber, Jimmy Donaldson, buys a teen banking app.
Yeah.
It feels like a publicity stunt.
Yeah.
Feels like he's going to give away a bank vault full of cash in a video and then, move on to the next thing.
And if you stop there, if you just dismiss it as a stunt, you miss the entire story. Because this is not just a celebrity endorsement.
Yeah.
This is not George Clooney selling tequila or Ryan Reynolds selling gin. Those are branding plays. This is structural.
This is structural. That's the perfect word for it.
Yeah.
This is about a fundamental shift in how money works, how banks acquire customers, and who the next generation trusts with their wallet.
Right.
And there is a massive, massive amount of money behind this move that I think a lot of people missed because they were too focused on the YouTuber part of the headline.
That is the key. We are talking about a $200 million investment from a company called Bitmine Immersion Technologies.
And we will get into them.
Oh, we will. Because when you peel back the layers of this onion, you realize MrBeast is not just making videos anymore. He is attempting to build the financial institution of the next century.
Okay, let's unpack this. Because on the surface, it feels like, okay, cool, the guy who gives away islands is now doing banking. But the numbers here are staggering. We are looking at a potential paradigm shift.
Absolutely.
A shift in how Generation Z and Generation Alpha, my kids, essentially interact with money, crypto, and banking. So before we get into the plumbing of the deal, what is the mission here?
The mission fundamentally is to answer a single, very expensive question. Can a content creator disrupt Wall Street? And I do not use that phrase lightly.
It's the graveyard of many startups.
It is. We are looking at the convergence of three massive trends: the creator economy, regulated fintech, and decentralized finance, or DeFi. The bet here is that Jimmy Donaldson can do to banking what he did to television.
That is a heavy proposition. So let's start with the deal itself. Section 1, the acquisition. MrBeast's company, Beast Industries, has acquired Step.
Right.
Now, for those of us who are not teenagers and have not had to think about allowance apps in a while, what exactly is Step?
So Step is a financial services app specifically designed for the next generation teenagers and young adults. It launched back in 2018.
Okay.
And to really understand Step, you have to understand the problem they are solving. The traditional banking system, it essentially ignores kids.
Oh, they do. I remember trying to open my first account. It was a nightmare of paperwork. My dad had to come with me. We had to go to the branch. It was an ordeal.
Exactly. You cannot open a bank account easily if you are under 18 without a parent co-signing, physically going to a branch and jumping through all those hoops.
And even if you do, the product is terrible.
It's awful. It's a passbook savings account that earns 0 interest and has a clunky interface that looks like it was designed in 1998.
Right. It smells like old carpet and stale coffee.
Step is the opposite of that. It's an all-in-one money app. It offers savings accounts, investment tools, and crucially, a secured Visa card.
Okay, the Visa card is the key, right?
It's the magic. And the magic of that card is that it helps users under 18 build credit history before they are even legal adults.
That is huge, because usually you turn 18, you have 0 credit, and you cannot get a loan for a car or an apartment. You're a ghost to the financial system.
Precisely. Step solves the cold start problem for credit. It gives kids a financial identity, and they have scaled significantly because of it.
What kind of scale are we talking about?
Step currently has about 7 million users. So this is not some small startup that MrBeast picked up for pennies. This is a legitimate player in the fintech space.
7 million users is nothing to sneeze at. That is a solid foundation.
No, it's not. And it's also worth noting, just for clarity, Step is not a bank in the legal sense. They are a fintech platform.
What's the difference?
They partner with a chartered bank, Evolve Bank and Trust, to provide the actual FDIC-insured banking services.
Okay, so Step is the interface. It's the app layer that sits on top of the boring, old-school banking plumbing, the part kids actually want to use.
Correct. And it had some serious backing even before MrBeast came along. They had raised about $500 million from heavy hitters,
Right, Co.
like Stripe, General Catalyst, and celebrities like Steph Curry and Charli D'Amelio were early investors too.
So this was already a Silicon Valley darling.
It was.
So why does MrBeast want this? I mean, the guy has the biggest YouTube channel on Earth. He has a candy bar company, Feastables, that is printing money. He has a burger chain. Well, had to burger chain.
Right.
Why get into banking? Banking is hard. It's regulated. It's not exactly viral content.
It comes down to motivation and opportunity. On the personal level, Donaldson has been very vocal about this. He put out a statement saying, quote, "Nobody taught me about investing, building credit, or managing money when I was growing up."
Which is so relatable.
Yeah.
Like, we all felt that.
Right.
We learned the Pythagorean theorem in school,
Yeah.
but nobody taught us what an APR was or how compounding interest works.
Exactly. He views financial illiteracy as a worldwide plague. That's his term. So the stated goal here, the mission statement, is to provide a financial foundation for millions of young people. He wants to fix the problem he had growing up.
That's the noble mission.
Yeah.
And I'm sure there is sincerity there.
I think so.
But let's look at the business side, because financial literacy is a great buzzword. But you do not spend hundreds of millions just to be a teacher. This is where it gets really interesting. You mentioned zero-cost distribution earlier.
Yes.
What does that mean in this context?
This is the aha moment. This
Okay.
is the logic that justifies the entire valuation. Think about a traditional bank. Think about Chase or Wells Fargo. How do they get a new customer?
They send me mail. So much junk mail. Or they run ads during the Super Bowl. Or they offer me, what, $200 to open an account?
Right. And those ads cost millions. They have branches on expensive real estate. They have massive marketing departments. The customer acquisition cost, or CAC, for a traditional bank can range from hundreds to over $1,000 per person.
$1,000 just to get me to walk in the door.
Yes. Because banking is a commodity. A checking account at Chase is basically the same as a checking account at Wells Fargo. So they have to fight tooth and nail for your attention.
Okay.
Now look at MrBeast.
He has attention in abundance.
He has 466 million subscribers on his main YouTube channel.
466 million.
And that's just the main channel. Across his entire ecosystem, gaming, reactions, translations, he is generating 5 billion views a month.
5 billion. That is hard to even wrap your head around. That is more than the population of the Earth engaging with his content every single month.
It is an unprecedented level of reach. So when he buys Step, he does not need to buy a Super Bowl ad to tell people about it. He does not need to send junk mail.
He just makes a video.
He makes a video, he puts a link in the description, he tweets it out.
And boom, millions of kids sign up.
Exactly. His cost to acquire a customer is effectively zero. Analysts call this a zero-cost distribution model.
And that changes the entire economic equation.
Completely. When you do not have to spend $500 to get a customer, you can afford to offer better interest rates. You can afford to have no fees. You can offer rewards that traditional banks literally cannot match because their overhead is too high.
That is the distribution moat. He has a wall of content that protects his business. If Chase wants to compete, they have to spend $1 billion on ads. MrBeast just has to upload a video on Saturday.
Precisely. And it's not just banking. Step is joining a conglomerate. You mentioned Feastables, the snack brand. There's Beast Philanthropy. There is Beast Games coming to Amazon Prime.
It's an ecosystem.
Beast Industries is becoming a fully integrated ecosystem. He is not just an influencer anymore, he is a holding company.
So Step is just one piece of the puzzle, but it's an expensive piece. And that brings us to the money. Because as rich as MrBeast is, buying a fintech company requires serious liquidity.
No, this deal was fueled by a massive injection of capital. In January 2026, a company called Bitmine Immersion Technologies invested $200 million into Beast Industries.
Okay, stop right there. Bitmine Immersion Technologies. Who are these guys? I pull up their ticker, BMNR. They are not a traditional venture capital firm. They're not a bank. What are they?
They are an oddity, and that's what makes this deal so complex. Bitmine is effectively an Ethereum treasury company.
An Ethereum treasury company. That sounds strange. Does that mean they just hoard crypto?
In a way, yes, but it is very, very strategic. Their entire corporate directive, their philosophy, is something they call the alchemy of 5%.
The alchemy of 5%. That sounds like a Dan Brown novel. What does it actually mean?
It is a bold, almost aggressive corporate mandate. Their stated goal is to acquire 5% of the total circulating supply of Ethereum.
5%.
5% of all the ETH in the world, just to own it.
By 5%. That feels specific. It's not an arbitrary number.
Yeah.
In commodity markets, controlling 5% of the supply does not just make you a whale, it makes you a market maker. It gives you gravity.
That's it. You nailed it. If Bitmine achieves this, they are not just betting on the price of ETH going up. They're attempting to become too big to ignore within the network itself. They want a say in the governance, in the future of the protocol.
So how close are they?
As of February 2026, they are actually getting pretty close. They hold over 4.3 million ETH.
Wow.
Which is roughly 3.58% of the supply. They are 72% of the way to their goal.
That is an insane amount of crypto. It's billions and billions of dollars.
It is. Their total holdings, including cash, crypto, and what they call moonshot investments, like this one total, about $10 billion.
$10 billion. Okay. So why does a $10 billion company that hoards Ethereum want to give Jimmy Donaldson $200 million? What does MrBeast have to do with Ethereum?
Because Bitmine does not view Ethereum as just a coin you sell when the price goes up. They view it as a productive, yield-generating asset.
The future of finance.
That's their thesis. And this is where the connection happens. Bitmine is not just buying equity in MrBeast. They are buying a pipeline for their technology.
What kind of technology are we talking about?
So we need to pause on staking because I think a lot of people hear that word and confuse it with a savings account yield. It's not.
Right. It's proof of stake. It's about securing the network.
Correct. When you stake your ETH, you are essentially being paid to secure the blockchain. You are running software that validates transactions. You are the bank teller checking the signatures and making sure everything is legitimate.
And you get rewarded for doing that work.
You get rewarded in more ETH. Now, Bitmine has built a proprietary industrial scale infrastructure for this called MAVAN.
Man.
It stands for the Made in America Validator Network.
Made in America. That's a very specific choice of words.
It is absolutely critical to their strategy. MAVAN is not just a computer in a basement. It's a compliant, US-based validator system. That Made in America part is crucial because institutional investors are terrified of regulatory blowback from using offshore validators or anonymous pools.
So they are selling clean yield.
Yeah.
Geopolitically safe.
Precisely. They are trying to be the adults in the room for crypto plumbing, and this is where MrBeast comes in.
Okay, connect the dots for me.
Bitmine has the crypto engine, the MAVAN network, that generates hundreds of millions in yield. But they need a way to distribute that yield to retail users. They have the factory, but they do not have the store.
And Step is the store.
Step is the store, and MrBeast is the guy standing out front with a megaphone that reaches 5 billion people a month.
Wow.
They are betting that MrBeast will be the interface that brings the masses onto the rails of Ethereum. They want those 7 million Step users and the millions more who will join to eventually be using Bitmine's infrastructure to earn yield on their money.
So let me see if I have this straight. Bitmine has the engine, MrBeast has the car, which is the Step app, and he has the passengers, the 466 million subscribers.
That is the perfect analogy.
Hold on, though. That analogy sounds great on paper, but does it work in practice? We have seen crypto-integrated apps fail spectacularly before.
We have.
Why does Bitmine think a teenager buying a Feastables bar actually cares about Ethereum validator nodes running in the background? Is that not a massive leap of logic?
It is a leap. But the bet is not that the teenager cares about the nodes. The bet is that the teenager cares about the yield. If a traditional bank gives you 0.01% interest on your savings and Step powered by MAVAN on the back end can give you 4% or 5%, the user does not need to understand the technology.
They just see the number in the app.
They just see the number. It's invisible infrastructure. The user sees high interest savings. The back end is complex DeFi. That is the entire vision.
Okay, so it's not just MrBeast bought a bank, it's MrBeast bought a bank to plug it into the Ethereum blockchain.
That is the real story.
Which brings us to the generational portal thesis. This is something Tom Lee talks about.
Yes, Tom Lee. He is the chairman of Bitmine. He is a very well-known strategist, formerly of Fundstrat, a big name on Wall Street.
Right.
He presented this thesis at Consensus Hong Kong, and it really frames why this matters historically.
Okay, lay it on me. What is the generational portal?
The idea is that every generation has a specific financial company that acts as their gateway, their portal into the world of money.
Like a trusted guide, their on-ramp.
Exactly. So let's look back. For the baby boomers, who was it? Tom Lee argues it was Charles Schwab.
Sure. Before Schwab, buying stocks was expensive and exclusive. You had a broker. Schwab democratized it with low costs.
Right. Schwab opened the door for the boomers. Then you have Gen X. Tom Lee argues their portal was BlackRock and Blackstone. They professionalized assets, created ETFs, and made investing institutional.
Okay. And for my generation, millennials.
Robinhood.
Oh, absolutely. I remember when Robinhood came out. Gamified,
Right.
on your phone, zero commission. It changed everything. It made trading feel like a video game, for better or worse.
For better or worse, exactly. So the question is, who is the portal for Gen Z and Gen Alpha?
And Tom Lee is betting it's MrBeast.
He is betting the house it's MrBeast, not a bank. A YouTuber who is building a bank.
Why? What's the logic?
Think about it. Gen Z and Gen Alpha comprise about 120 million people in the U.S. alone. And right now, study after study shows they trust content creators infinitely more than they trust guys in suits on Wall Street.
That is true. My nephew would listen to Jimmy Donaldson explain a Roth IRA way before he would listen to a bank manager in a suit. There's a relatability factor that's just,
Yeah.
it's off the charts.
And there is a massive economic wave coming called the Great Wealth Transfer.
I keep hearing about this.
It's the transfer of assets from boomers to their heirs. We are talking about tens of trillions of dollars moving hands over the next couple of decades.
Trillions with a T.
Yes. Gen Z is not wealthy yet, but they are poised to inherit substantial assets. The strategy here is to capture them now.
Get them while they're young.
Exactly. Get them banking with Step and MrBeast while they are teenagers. Build that trust. Be the app they use for their first paycheck. And then as their wealth grows, the institution grows with them. It's about being there at the starting line.
It's the same reason tobacco companies use to target kids, frankly. Brand loyalty formed early is incredibly hard to break.
It's a cynical comparison, but economically it's accurate. You want to be the default choice.
So the vehicle for this is not just a checking account. This is where we look at the roadmap. Because in October 2025, a trademark was filed for MrBeast Financial.
MrBeast Financial, that sounds official. It's got a ring to it.
It does. And the scope of services in that filing is wild. It covers far more than just checking accounts. We're talking cryptocurrency exchange services,
Okay.
crypto payment processing, decentralized exchange, or DDX transactions.
A DX. So MrBeast wants to run a decentralized trading platform.
The filing allows for it. It also mentions insurance, student loans, and credit insights. It is a comprehensive financial suite. It's everything.
It sounds like they are trying to build a super app.
That is the term experts are using. You know WeChat in China.
Yeah, you do everything on it. You chat, you pay your bills, you order food, you hail a cab. It's your digital life in one app.
That is the model. But people have tried this in the U.S. before. PayPal tried it. Uber tried it. X is trying it. Nobody's really cracked it because the U.S. market is so fragmented.
Right.
Why would MrBeast succeed where tech giants failed?
Because of the culture, the Beast ecosystem is unique. Imagine the synergy here. We mentioned Feastables,
And Beast Games?
and now there's Beast Mobile. That is their upcoming telecom service.
Wait, Beast Mobile, I missed that one. He's starting an MVNO.
Yes, they are launching a phone plan intended to provide affordable global data. So imagine a user profile. You have a Beast mobile phone plan. You watch Beast videos on that phone. You eat Feastable snacks while you watch.
And you pay for all of it. And bank with Step, which is powered by Bitmain's Ethereum treasury.
It is a closed loop. It's a company town for the digital age.
That's a powerful and slightly scary concept.
It is the institutionalization of the creator economy. It's no longer about selling merch. It's about owning the infrastructure of daily life.
And the crypto integration is not just a side project. It's core to the strategy.
No, it's fundamental.
How?
Beast Industry CEO Jeff Hausenbold, who, by the way, is a serious executive, formerly of Shutterfly and SoftBank, not a YouTuber,
You're a real operator.
or a real operator, he has explicitly stated plans to incorporate DeFi.
So what does that look like practically for the user?
This is where we can speculate based on Bitmain's tech. Remember Maven?
The staking network, the yield engine.
Bitmain's infrastructure makes something called content incentivized yield possible.
Content incentivized yield, that is a mouthful. What does it mean?
Imagine watching a MrBeast video. But instead of just being entertained, your engagement, your time, is actually earning you staking yield in your Step account.
Wait, so I watch a video and my bank account goes up. Literally.
Theoretically, yes. Or maybe by holding a certain amount of money in your Step account, you unlock exclusive content. Or you get higher rewards on your purchases. And those rewards are funded by the Ethereum staking yield on the back end.
It blurs the line between audience and customer.
It erases the line. Your attention becomes an asset that generates yield.
That is mind-blowing. And honestly, a little dystopian. It turns watching into working.
It does. It financializes attention in a very, very direct way.
But, and there is always a but in these deep
Here it
dives,
comes.
we have to take the rose-colored glasses off. Because you cannot mention Jimmy Donaldson and crypto in the same sentence without addressing the massive elephant in the room,
And
the investigations.
Yes.
Specifically, the work done by the on-chain detective Somek XBT in October 2024. If we're going to trust this guy with the banking infrastructure of Gen Z, we need to look at his track record.
You have to.
And it's not clean, is it?
No, it's not. And frankly, if this were a traditional bank CEO, this history would probably disqualify them from a board seat. So MaxBT did a forensic analysis of crypto wallets linked to MrBeast.
And we are not talking about him losing a few bucks on Bitcoin here and there. We're talking about serious allegations of orchestrated pump and dump schemes.
That's the accusation.
Walk us through the specifics. What is Superfarm?
Superfarm, the ticker is Super, was a hyped-up NFT project back in the bull run. The allegations are that Donaldson invested about $100,000 into this project very early on. He then used his influence social media endorsements to drive massive attention to it. The price, predictably, went parabolic.
Because his fans follow his lead. If Jimmy likes it, it must be good. They trust him.
They trust him implicitly.
Yeah.
And once the liquidity was there, provided by his fans buying in the wallets associated with him sold, they dumped.
And what was the profit?
The investigation claims he profited roughly $9 million.
$9 million profit on a $100,000 investment. That's a 90x return.
An incredible return. And the token subsequently crashed. It lost 90%, maybe more, of its value. So that $9 million did not come from thin air.
No, it came from the pockets of the people who bought at the top, his own fans.
That's the accusation.
This is the moral hazard. He says, I want to teach kids financial literacy. He says, I want to save them from the mistakes I made. But is not this the mistake? Using your audience as exit liquidity.
It is a profound contradiction. It's almost a Jekyll and Hyde situation. Yeah. You have the St. Jimmy persona, the philanthropist, the guy curing blindness, digging wells in Africa. And then you have the Diggin' Jimmy shadow, the guy allegedly trading low-cap altcoins for massive profit at the expense of retail investors.
And it was not just Superfarm, was it? There were others.
No, the report was comprehensive. There was another one called Polychain Monsters, ticker PMON. He allegedly invested $25,000 and sold for a $1.3 million profit. Same pattern.
Unbelievable.
Other tokens like SPLYT, which is SHOPX, Stake, VPP, the list goes on.
So how does a regulated bank reconcile that? You mentioned STEP is partnering with Evolve Bank and Trust. Evolve is an FDIC-regulated entity. Do they just ignore this? Do the regulators just look the other way?
They can't ignore it, but they can try to fence it. The argument from the Beast Industries camp is that by buying STEP, Donaldson is going legitimate. He is moving from the Wild West of unregulated tokens to the structured, compliant world of banking.
It's a pivot to legitimacy. I'm done playing in the mud, now I'm wearing a suit.
Exactly. But the reputational risk is a ticking time bomb. Can a bank run by a YouTuber survive that kind of scrutiny? When you are applying for licenses, when you are dealing with regulators, integrity and character are key words.
And speaking of regulators, they're probably watching this with a microscope.
Closely is an understatement. The CFPB, the Consumer Financial Protection Bureau, is currently obsessed with open banking in Section 1033. They are cracking down on how fintechs use data and market their products.
And banks are getting in trouble for way less than what we're talking about here.
Oh, absolutely. Capital One is facing potential enforcement over savings disclosures. Now, imagine a gamified bank for teens run by a YouTuber with this kind of crypto history.
Yeah.
The scrutiny regarding how they explain risks will be intense. If STEP starts offering crypto yield or DeFi products to 19-year-olds, the SEC and the CFPB are going to be sitting in their lobby with a pile of questions.
So maybe that's why they bought STEP instead of building from scratch, to buy that compliance.
That is the expert consensus. STEP is already a regulated entity. They have compliance teams, they have lawyers who know how to talk to the FDIC and the OCC. It is a way to grow up fast. It signals a move away from the wild speculation like the Superfarm days toward structured, compliant banking.
It's an expensive way to buy a clean slate.
Very.
So how is the market reacting to all of this? We talked about Bitmain's stock ticker BMNR. Are investors buying the hype? Or are they spooked by the risk?
It is a complete mixed bag. which is typical for something this novel, BitMine stock is incredibly volatile.
I bet.
On one hand, you have some analysts like B. Riley who are very bullish. They have a buy rating with a $47 price target.
$47. Where is it trading now?
Around 30. So that's a significant upside. Their argument is exactly what we discussed. The marketing access to 466 million people is undervalued. They believe the zero-cost distribution is a cheat code that the market has not priced in yet.
But not everyone agrees.
Not at all. Zacks Investment Research has a much cooler take. They have a hold or sell rating. They cite overvaluation. And the big risk they point out is that BitMine's fate is inextricably tied to the price of Ethereum.
Right. They are an Ethereum treasury.
Hmm.
If ETH crashes, BitMine's balance sheet crashes.
Exactly. If ETH goes to zero, BitMine goes to zero, regardless of how many teens sign up for STEP. You live and die by the coin. It's a fundamental, unavoidable risk.
That is the danger. It's a leveraged bet on crypto adoption with a YouTube star as the frontman.
Correct. But there is one piece of economics that makes the bulls very, very excited, and that's the staking revenue.
The Maven network again.
Yes. We can't overstate this. BitMine's internal staking operation is already generating huge revenue, over $200 million annualized, and they project that to grow as they get closer to that 5% goal.
That's real cash flow.
It's real cash flow.
Yeah.
And if they can integrate this into STEP, they could offer a yield that traditional banks simply cannot match. It's not even a fair fight.
A traditional bank gives you, what, 0.01% interest, if you're lucky?
If you are lucky. If BitMine can pass on even a fraction of the Ethereum staking yield, say 3 or 4% to STEP users, while keeping the user experience dead simple, that is a killer product.
That destroys the competition. Why would a kid open a Chase account for 0% when MrBeast gives him 4%?
They would not. It fundamentally changes the value proposition of a checking and savings account. It turns it from a utility into a yield-generating product.
So what is the final verdict here when we zoom out? Is this a gimmick? Is it just another influencer selling a product? Or is this the future of finance?
I think we have to move past the influencer selling a product narrative. This is not a merch drop. This represents the institutionalization of the creator economy.
Institutionalization, that's a strong word.
I think it fits. We are seeing creators move from being billboards for other companies to owning the infrastructure themselves. It's no longer about selling ads for Coca-Cola. It's about building the rails that money moves on.
It feels like we are watching history happen in real time. Whether it succeeds or fails is a massive swing for the fences.
It is a moonshot, and Tom Lee is betting his reputation and hundreds of millions of dollars that MrBeast is the Charles Schwab of the 21st century.
Well, we have covered a lot of ground today. Let's recap. We have a massive Ethereum treasury, BitMine, funding the world's biggest creator, MrBeast, to buy a regulated fintech app, STEP, to capture the next generation of wealth, Gen Z and Alpha.
A simple sentence that would have made 0 sense 10 years ago.
Truly. But before we go, I want to leave the listener with a thought. We talked a lot about trust. We talked about how Gen Z trusts MrBeast more than a bank manager.
Yes, that's the core of the thesis.
But here is the provocative thought for you to chew on. If MrBeast succeeds, if he actually becomes the bank for Gen Z, does financial literacy eventually just become another form of content consumption? And in a world where your bank is also your entertainer, what happens when the show gets canceled?
Or what happens when the algorithm changes? Or the entertainer has another scandal? It is a fragile foundation for a financial institution. When you tie your savings to a personality, you inherently take on the risk of that personality.
It's something to mull over. Thanks for listening to The Deep Dive.
Thank you.